Our first guest most recently appeared before the U.S. Senate Banking Committee last week to talk about the opportunities of a central bank digital currency. Joining us now is Professor Darrell Duffie, who teaches finance at Stanford's Graduate School of Business. Welcome, Professor Duffie. So you mentioned in your testimony last week that China's payment systems are more advanced than the United States. People are using WeChat, Alipay. China's developing a digital yuan partially to address those forces. Are there any risks of China developing its digital yuan being first to the market?
Well, I think we already know that China's digital yuan is going to be first in the market, at least among major countries, CBDCs. They've taken the last 5 years to develop it, and they're first out. They're going to be releasing it at the Olympics early next year.
And you mentioned in your testimony as well that there may be concern in terms of having a foreign or maybe an invasive currency out in the market before, say, a domestic U.S. currency could be released.
Yeah, many countries, Canada, the European Central Bank, Sweden are introducing or at least developing central bank digital currencies, partly in order to fend off invasive digital currencies into their payment systems.
You mentioned deflecting undesirable and invasive types of cryptocurrencies in your testimony as well, before they gain traction in U.S. payments. Which undesirable and invasive cryptocurrencies are you talking about here?
Well, let's take, for example, for payment purposes, the use of Bitcoin or other cryptocurrencies that can fly under the radar of compliance. Many countries don't want to have to deal with anti-money laundering concerns with respect to those kinds of cryptocurrencies. Not that they're going to prevent them from being used for investments, but I think many countries would prefer that they not be used for making payments. And China has already banned the use of Bitcoin for purposes of making payments.
So you make a very compelling case for the problems with the current banking system. But the question is that if we were to have a digital dollar, why is it the best solution to have the U.S. government or the Fed issue this digital dollar as opposed to some sort of private solution? Because, you know, as you also noted, that there are some real serious privacy concerns with having the U.S. government behind such a project. So why do we need the government actually to do this?
That's a perfect question. In my view, we don't actually need a central bank digital currency, although we may end up with one because the existing U.S. payment system is falling behind, both technically, and it's also very expensive to use. So the government may need to prod the banking system and credit card companies to improve. One way to do that would be to introduce a central bank digital currency. Although that may be the last option, there are other options, like allowing fintech payment firms to enter the bank-based payment rails. And that could also prod more competition and technical innovation. So in the end, it may not be necessary to have a CBDC for the US, although I think the United States should develop one at this stage because it takes a long time and you want to be ready if and when it's needed.
Professor Duffie, I do want to get to
on the privacy question for 1 second. What is kind of the worst case scenario here? Because you do highlight the privacy concerns. I mean, what could really go wrong on the privacy front if the US government was actually to develop this digital dollar?
Well, there's a lot of tension in the design between protecting privacy and also guarding against illegal payments. So what might go wrong is that the United States decides to develop a CBDC with a very large centralized database that turned out to be not well enough designed to protect it from cyber attacks. If that were the case, then obviously you'd be concentrating all the data in one vulnerable place. But I trust that the United States won't develop a CBDC or at least release it until that sort of concern has been put away with. That would be taking too much risk, and I doubt that will be done.
You also mentioned adding biometrics data to a central bank digital currency. How would that operate when thinking about privacy?
Yeah, so for those users of the payment system that wanted to use their biometric identities, that would save a lot of time. I don't know about you, but when I access payment systems, there is quite a bit of sign-on work and verifying that I am truly myself. And with biometric identities, I would have much quicker and easier access. But many people might not wish to be part of a centralized biometric database. India, with its UPI system, has actually made great strides forward using biometrics to allow Indians to access their payment system, and it's worked quite well there.
Professor Duffie, before I do want to ask you about stablecoins, but before we do, suppose the U.S. does do a CBDC. What part of the financial system would be most hurt by it? What kind of companies would we potentially see, or industries would we see fall apart if all of a sudden now we have a quick clearing system?
Well, first of all, some fintech payment firms might be disappointed because they're hoping that they're going to be a major part of the payment system, and maybe they would even with the CBDC, but that would reduce the need for those. Bank profits would go down. It's not going to be devastating for them, but they're not going to earn as much profits from running the bank-based payment rails as they do now. Their credit card revenues in particular would be reduced because presumably consumers would turn to a CBDC if it was well designed. But I don't see any major, devastating impact on any particular firms or industries right now.
Do you see a threat, getting to stablecoins, do you see a threat to not only the crypto markets, but to the overall market when it comes to some stablecoins potentially not having the assets that they claim to have on their books? That's one of the reasons that some countries are developing CBDCs. If a stablecoin, which is actually quite simple and effective for making payments, were to become a major part of the economy, then there would be concerns by regulators about whether those stablecoins are in fact truly stable. Tether, as you know, was subject to a lawsuit and had to disclose that the assets backing that particular stablecoin were not 100% safe. There's a substantial amount of commercial paper and other types of assets that are not guaranteed to remain at $1 per dollar. And so regulators would prefer that those sorts of stable coins not be heavily used in the payment system.